Everybody's celebrating Ethereum's new highs. But most don't realize the real explosion hasn't even started yet. Behind the charts, the whales, the Fed, and Wall Street, all signals point to something much bigger, a possible $6,000 breakout. So the question is, are you ready, or will you be left behind? Quick reminder, this is not financial advice. Always do your own research before making any investment decisions. And just so you know how fresh this video is, at the moment I'm recording, Ethereum is trading at around $4,740, holding just below its all-time high of about $4,880, which it briefly touched after Jerome Powell's Jackson Hole speech earlier this month. This context is important, because it shows you exactly where we are in the cycle right now. And make sure you stay until the very end, because I'll share a powerful price prediction that could completely change how you see Ethereum's next move. Ethereum has been showing signs of serious strength. On-chain metrics reveal that taker-buy volume has surged to nearly double what we usually consider a bullish signal. Normally, if ETH hits 3.5 to 3.7 billion in hourly buy volume, that's considered very strong. Recently, we've seen levels above 5.7 billion. What does that mean? It means buyers are stepping in aggressively, while short traders, the ones betting against ETH, are being liquidated on a massive scale. And every liquidation creates more upward pressure. At the same time, macro conditions are shifting. Jerome Powell, in his Jackson Hole speech, hinted that the Fed could begin cutting rates. And the bond market is already pricing in 2 cuts before the end of the year. Rate cuts equal more liquidity, and when liquidity returns, crypto tends to outperform traditional assets. But here's what almost nobody is talking about: Wall Street is positioning itself to use Ethereum as its backbone. And that could turn this rally into something much bigger. Investor Tom Lee compared Ethereum today to 1971, when the US dollar left the gold standard. At the time, the financial system had to reinvent itself, and that transformation gave birth to modern Wall Street. Now in 2025, regulators are pushing Project Crypto and passing frameworks like the Genius Act, which encourage tokenization and blockchain adoption. And guess what? The majority of this infrastructure is being built on Ethereum. We're not talking about meme coins or hype tokens. We're talking about stablecoins issued by brokerages, tokenized bonds, tokenized stocks, and new financial rails that move faster and more transparently than the old system. Ethereum's smart contract capabilities, through the Ethereum virtual machine, make it the default platform for this transformation. If Wall Street is retooling itself to run on ETH, demand for Ethereum isn't just speculative, it becomes structural. But Ethereum's future isn't just about adoption, it's also about repeating a pattern we've seen before, one that could define the next 30 days. Ethereum has been following a predictable cycle for nearly a decade. In 2017, ETH traded sideways, broke out to new highs, then went into full mania. In 2020, the same thing happened: consolidation, breakout, mania. And now, in 2025, we've already broken out to new highs again. Each time ETH hit new highs, it didn't stop there. It triggered a vertical move, fueled by retail FOMO and institutional flows. Right now, the signs are eerily similar. Whales are accumulating. On-chain flows show ETH leaving exchanges and moving into cold storage, a classic bullish indicator. Shorts are getting crushed. And momentum is building. But don't mistake this for a one-way street. Corrections, fakeouts, and sideways trading will happen, just like with Solana in 2024. Solana teased investors with pullbacks before ripping higher. Ethereum could easily do the same. Which brings us to the real debate: could Ethereum actually flip Bitcoin this cycle? For years, people laughed at the idea of Ethereum surpassing Bitcoin. But now, analysts like Tom Lee are giving it a 50% chance. Here's why: Bitcoin's fully diluted market value sits above $2 trillion. Ethereum's? Around $500 billion. But Ethereum isn't just a store of value, it's a network that powers finance, NFTs, gaming, stablecoins, and now Wall Street tokenization. Add to that Ethereum's inflation rate, just 1/3 of Bitcoin's, and you get a formula where scarcity and adoption collide. If Bitcoin is digital gold, Ethereum is becoming digital Wall Street. And in that scenario, a 1-to-1 market value ratio doesn't sound impossible anymore. But the real risk is this: what if the cycle is already ending? Are we at the peak, or still at the beginning of Ethereum's vertical phase? This is where it gets interesting. One of the most accurate tools in crypto history, the Pi Cycle Top Indicator, predicted Bitcoin's highs in 2013, 2017, and 2021 within just a few days. And right now, that indicator is showing we are not at the top. Bitcoin's moving averages haven't crossed, meaning we're still in bull territory. And historically, when Bitcoin has room to run, Ethereum tends to outperform it. Combine that with Fed rate cuts expected later this year, Wall Street tokenization on Ethereum, and massive whale accumulation, and the stage is set. My outlook? Ethereum could realistically push toward $6,000 in the coming months. Not in a straight line, we'll see volatility, shakeouts, and corrections. But the setup for the rest of 2025 is crystal clear. ETH has the momentum, the adoption, and the liquidity. So what do you think? Can Ethereum really hit $6,000 this cycle, or is Bitcoin still the king? Drop your take in the comments below, I'll be reading them all. And if you don't want to miss what happens next, hit subscribe, because the next few weeks could define the future of crypto.